sort of the first question came in from Salvatore. And Salvatore this morning had emailed me and had said that I read somewhere that Carl Icahn put in a $50 million bet on put options for SPX. And if SPX is trading at 40.50, he's going to have a profit of $5 billion. So it's over a 100x return, not 100 times, but like 100, return from 50 million to 5 billion. Okay. Well, I started to look at this, and the way that I started to look at it actually is by using the long option finder on PowerOptions. I'm sorry, the expiration was February 17th. I forgot to mention that. So someone out there in the podcast world, the Twitterverse, was saying that, Carl Icahn made this $50 million bid on put options, or bet, I should say, on put options. And if it's below 4,050 on February 17th, he stands to turn that into 5 billion. The numbers did not look right to me at all. That even if he got in at the peak, and I'll talk about that in a moment, there was no way that we were going to see those type of returns. So first off, if I go in today, this is the long option finder tool. It can be accessed under the signature tools and PowerOptions, or under just the long call strategy or the long put strategy as well. It is a simple but powerful tool. You put in the underlying security. You put in your expected price of the underlying security, how much you're willing to invest in options. Let's just use $5,000 instead of the 50 million, or maybe it was 50,000 instead of the 5 million. An expected target, the target date, my apologies, of February 17th. And we'll just go ahead and submit that. What this tool is doing, and it takes a while because there's dozens and dozens and thousands of options, dailies, otherwise, on SPX. This tool is going out across all available options for SPX, calculating the basic current price of SPX and the SPX options, and calculating what their theoretical worth would be if SPX hits my target price on my target date. And as we can see, the highest return would be the 21st of February 4,200 put. Maybe I should use the 16th as the date, but that's only a 19% return. It's nowhere near the values that Salvatore was discussing. All right, so let's go back to the 16th. Now, it's going to take some time to run this again, but we're just going to change it up a little bit here and see what we've got. So we can target the February 17th expirations, which should be a cheaper price and should give us a bigger return, since we're using the day before the day of. Now, again, for most securities, this tool will snap right in. It's just looking at all the dailies, all the weeklies, and everything else. And yet, still the 4,200 put with only a 24% return, taking 50,000 up to 59,784. Not bad at all for a 7-day trade. Nowhere near that 100x value that we were talking about. So, as always, when a question comes in via email, I explain this to Salvatore and said, I don't think this is right, but before I reply, let's take a step back. Maybe this did exist, but he did it at a different time. Maybe he peaked the market correctly and made this $50 million bet on put options. He's not really using it as a bet to profit. He's using it to hedge the giant portfolio that he has. The numbers are wrong, by the way. It's not $5 billion in profit if this target is hit. There's no way. So, but taking a look at it here, the peak of SPX was around 41.80. So a drop to 40.50 is about 3%. It's $120 or so, $130, which is about 3% of what the stock was at 41.80 at the peak. Well, a 3% drop from where we are now at around 40.90 would put us right at about 39.50, 39.60, 39.70, somewhere in those ranges. So let's say we did pick the peak. The prices are going to be subtly different, but let's say we did pick the peak, and the peak was today, with it at 40.90. So we expect another 120, 130 drop. Let's take it down to 39.60. on 216. And again, the tool is going through using the theoretical pricing models to show us which option would give us the best return if the underlying hit our target on our target date. Again, it's going through all of the different scenarios, all the different calculations of the Black-Scholes. Usually snaps right in if we're just using a standard stock, but there we go. Now, so here we're seeing some 100% returns, taking $50,000 up to $129,000, 168% return. And most of these options, which would be right at the money from now, slightly in the money at 40.60, slightly, I'm sorry, all out of the money. My apologies. We're at 40.90. But with the stock hitting 39.60, these are the options that would theoretically give us the best return if that target price was hit, that 3% decline in the next 7 days. Well, so then I started to think, if someone is claiming these numbers are realistic, this had to have to have been done much, much earlier when the peak was hit. Maybe Mr. Icon decided that when the peak was hit, what do I mean by the peak? One of the highest points back a couple years. Remember 4,800? Remember 4,500? Those type of things. So let's go back. I think I went back 3 years here. Maybe I only needed 2. Yeah, I only need 2 years. My apologies. Let's do that. All right, so I started to say, okay, 4,800 here. That's great. That's mid-December 2021 before we jump into 2022. Okay, so up at that peak there. And maybe sometime in April or May of 2022. I'm sorry, right about here, when the stock was at about 4,500. Now, why is that relevant? Because a 10% decline over the course of about a year, almost a year, 10 months, 11 months, or 10 months, would put us right at 40.50. So maybe that was a consideration. Now, he would have hit it, the profit he wanted here. He would have hit the profit he wanted here well before that expiration at 40.50. And this was for the 17th of February expiration. So I thought, okay, now we've got a target. December 21, April to May of 2022. What were the prices of these February 17th options at that time? But then I had to take something else into consideration. I want to go to the research tool for the 17th of February. It doesn't matter which one. We're going to go into the option research tool here on PowerOptions. Excuse me, folks. And the reason I'm going here is because this tool allows us to see the comparison and sort of the history of the option related to the option bid price compared to the delta, changes in implied volatility, or the stock price. But that history is the full history since the option was released on the market. And why this is important to look at, there we go, is because this option, the February 17th series, all options in the February 17th series were not released until September. Yeah, maybe a little bit before then. Let's see if we can do our scrubber here to get to the very beginning. End of August of 2022. Which means what? That whole series was not available December of 2021 at the peak of 4,800, or in April or May of 2022 when that 4,500 mark was being hit for the 10% decline. Might have been here at 4,300, but then 4,300, a 9% decrease, is still not enough to turn that 50 million investment with the put options at any strike into 5 million. It was a misnomer. Why am I going through this exercise? To illustrate the power of the optimized long option finder. You're wondering which call or which put is the best for your stock. The reason that you're asking that is because you have a target price for the stock in your mind. You think the stock's going to gain 5 or 7%, 10 or 12% in a certain time frame. That's why you're looking to buy a call. You think it's going to decline 5 or 10% or has the potential to drop 10 or 12% in a certain time frame due to earnings, not due to earnings, or market conditions. Rather than going through each individual option or assuming that the at-the-money option is going to give you the best target return, looking at each individual option on the option chain and trying to run a Black-Scholes pricing model manually, this tool does it for you. You put in your stock price, your stock symbol, your target price or roughly near it, the amount you're willing to invest, and the target date for your expected movement up or down, and it's going to show you the calls or puts. Naturally, if I put an increased price, it's going to show me the calls. If I put a decreased price, it's going to give me the puts. And that's what we have here. This is a very powerful tool. In addition to that, I wanted to showcase not only do we have the features here for the option bid versus the stock price historically, since the option was released on the market, which you can always see, but you could compare the option bid to the change in delta, implied volatility, for example, Black-Scholes value. I don't really use it that often. Time value change, just to get a gauge of the option over time and how is it performed, how is implied volatility fluxed, how is it related to the stock price as far as pricing goes, how much time decay did you see over X period or Y period since this option's been opened. It's also a very powerful tool to use as well. So even though Salvatore and I agreed that this wasn't a relative discussion to have during the webinar because I had answered his question, for example, it does give me a chance to illustrate the power of two important tools to use for option analysis and evaluating long option positions. Kip says, in relation to our first discussion for that we just touched upon for Salvatore, Kip says, from what I read yesterday, it was reported to be a 25K ESE mini, I guess, 217. Oh, okay, 25,000 puts were bought at the 40-50 strike for 217. It was attributed to Carl Icahn without any evidence whatsoever. So someone just bought 25,000 puts at 40-50 for February 17th expiration looking for some profit. Someone assumed that the only person that had that type of money was Carl Icahn. But we know he does. Kip, thank you for that, by the way. I apologize. Thank you for that. But we know that Mr. Icahn does use SPX and SPY puts on a consistent basis to hedge those large stock holdings that he has in his portfolio, which are worth much, much more profit-wise. So anyway, thank you for that, Kip. That hedges it a little bit. But just, you see, this is part of the problem that I come into. You guys bring me great questions always. And Salvatore brought me a great question because it got me to think. It got me to use the tools on PowerOptions that I always regularly use anyway, but it got me a chance to showcase those in the sense of the long option finder and in the sense of the historical options results on the option call or put research tool as well. Today's material are my thoughts on your questions, designed for educational purposes, increasing investing performance and options knowledge. Any stocks or options discussed today should not be taken as direct trading recommendations or trading suggestions. Options involve risk, as we saw a little bit today, and unfortunately I know we've all experienced in our portfolios, but we're here to guide you to help as best we can. But options may not be suitable for all investors depending on where you are, what you're looking to accomplish, and of course your expectations. We had a chance to look at the search tool functionality today for the Married Put screen. We had a chance to look at the portfolio tools and linking the position analysis to see rollout opportunities where all the math is done for us. We looked at some of the historical tools and, of course, analyzing the profit and loss chart. And at the beginning, powerful tool of the long option finder as well, and the historical data for options. Hey, these tools can help your trading. If you want to check them out, remember you can do a 14-day free trial at any time. Just go to powerop.com. Just need name and email address. You'll have full access to the site, limited history to back to about 3 months for 14 days. You can schedule coaching sessions as well. You'll have access to those various signature tools, including the long option finder, the backtest tools, and the search tools for all 23 different strategies. And again, no credit card required, so there's no risk of being billed. If you decide to continue after your 14 days, you would put in your credit card and become an active subscriber, and subscriptions start at only $45 per month for the end-of-day data service. upgrade to that, the delayed service, it's only $20 more. So the data is being updated every time you do a search or run a scan. Well, every 12 or 15 minutes, the data is updated so you see more timely data. The 20-minute delayed subscription with full access to about the 6.5, 7 years of historical data is $100 per month, only $35 more. We, of course, do offer a real-time service and the premium, which includes everything, including the API, the programmer's interface, if you want to do your own programming to interact with the data. You can cancel at any time. There's no contractual obligations. Free coaching is available on all levels of subscription. That's essentially a 35 to 45-minute coaching session with myself or Ernie. Walk you through the tools on the site, answer any questions that you have. You can upgrade at any time, and any level of subscription has full access to the archived webinars. Now, speaking of which, again, you can just go to the webinars tab, free webinars under the main home tab. And the 4 categories there: tools, options, strategies, options, concepts, requested topics. Or as we showed today, you can go into the YouTube channel, use that magnifying glass search function to search for different keywords, of course, that match your topics. Covered calls, poor man's covered call, diagonal spread, credit spread, debit spread, long call. You can just run that search, but there's also various playlists there that are available as well.